An emergency rescue. UBS buys Credit Suisse for half its market value in a deal brokered over the weekend. But so far, it's failed to calm markets. The world's leading central banks are coordinating their response, trying to restore confidence by boosting the flow of US dollars through the global financial system. Hello and welcome to World Business Report. I'm Tadhg Enright. Well, let's start with that unprecedented, historic banking deal agreed over a weekend of fraught negotiations in Switzerland as the authorities there, its central bank and leaders of its two biggest banks tried to prevent another damaging financial crisis. Late on Sunday, it was announced that the troubled bank Credit Suisse was being taken over by its rival UBS in a government-backed rescue worth more than $3.1 billion. That is less than half the value of Credit Suisse at the close of trade on Friday. The deal's been widely welcomed, including by the Bank of England, the European Central Bank and by the US Federal Reserve, but not everyone's happy. Credit Suisse bondholders have lost $17 billion worth of their investments. Shares in both banks have slumped and there's been a sell-off of banking shares across the markets today. Well, here's the chief executive of UBS explaining the rationale behind the deal.
It means we bring back stability and security for Credit Suisse clients, but also that we keep the reputation of the Swiss financial centre high. And finally, it means we're stemming the turmoil in the international financial markets. These three goals are very, very important to us. We're building a big UBS with less risk appetite.
Well, Credit Suisse has been struggling with a series of challenges for quite a long time, but why did it fall into such a deep crisis so quickly? Here's our business editor, Simon Jack.
Credit Suisse became the biggest and most important casualty of a situation that has already seen the failure of two mid-sized US banks, Silicon Valley there and Signature Bank, and an emergency industry £30 billion whip round for another, First Republic Bank. Why did these banks get in trouble? Well, the reasons differ, but the main reason behind it all is this. Global interest rates, these are US interest rates, after many years of being close to zero, you can see there, have rocketed as countries have tried to bring down inflation, caused mainly by higher energy prices as Russian energy was shut off or shunned. Now, that sudden change has hit the value of some of even the safest investment the banks keep some of their money in. So the big question is, are we back to 2008? Is this a rerun of the financial crisis? Well, this is precisely what the authorities are trying to avert.
Well, Chris Roebuck is a British economist and former head of leadership at UBS, and he joins us now. Thanks for being with us today, Chris. This move was designed to calm markets. Overnight in Asia and today in Europe, there was an initial sell-off, a slump in across the markets in general, although now the indices, the main indices, the FTSE and the likes of that, are around the break-even point again. So does it suggest that actually it's worked?
It's moving in the right direction, which will no doubt please the Swiss government and central bankers around the world, but also bank customers. We'll obviously have to see if that trend continues. Certainly, it also depends on what happens in relation to the actual plan that is put forward around leadership, around culture, around risk. How you get two banks of this size to work as one bank.
Indeed, in normal circumstances, the two biggest financial institutions in Switzerland, a merger between them would be blocked on competition grounds, but this is an emergency rescue. Do you see this structure being allowed to continue for the foreseeable future, or will there come a point where the regulator says, no, you're too big now, you got to split up again?
Well, I think that is down to the Swiss government and their perception of the stability that is required. Because of all governments in the world, it's the Swiss government that likes the stability in the financial market with their banking system, because the banking system is so critical to the overall Swiss economy. In terms of, is it a monopoly? If you look at what Credit Suisse does and UBS does, first of all, there's retail banking in Switzerland, branches on the high street. Now, fundamentally, you're not going to have two of the same branches on every single high street. So there's going to be fallout there. There's going to be redundancies. Branches are going to close. But also in Switzerland, there are a number of local banks that many people bank with just for normal banking purposes. So it's not as if UBS is going to have a complete monopoly. Outside Switzerland, obviously, there is private banking for ultra high net worth people across the world. There's investment banking and there's asset management. That is duplicated across UBS and Credit Suisse. Now, inevitably, what is going to happen is that UBS is going to cut in to the Credit Suisse elements. One, because it's got its own people, but two, because the reason that Credit Suisse is where it is now is that it did not learn the lessons of the financial crisis. Repeatedly since then, they had a tendency to go for making money at all costs, risk management that was questionable, the fact that leadership was about making money, not necessarily integrity. UBS does not want that sort of toxic culture getting into its own bank.
Okay, Chris Roebuck, thank you very much for joining us with your thoughts
Pleasure.
today. Well, let's talk now more about the response from central banks. The world's leading central banks have launched a coordinated response to keep credit flowing after this unsettling period in the US banking sector and, of course, the Credit Suisse rescue here in Europe. 6 central banks, including the Bank of England and the US Federal Reserve, have announced that they're going to boost the flow of US dollars moving through the global financial system. Our business reporter Jonathan Josephs joins me now. Jonathan, what more can you tell us about this central bank response and why they think it's the right move?
Well, Tadhg, what this central bank response is about is trying to make sure that there are enough dollars in the right place at the right time to reassure investors that their money is safe. Because in times of crisis, as this seems to be, investors typically try to move their money into US dollars because they are regarded as the safest of safe in terms of investment opportunities. They have the weight of the US government behind them, and that is regarded as something that will make sure that they do get their interest payments and that they can get their money back when they want it. So making sure that there is enough US dollars around the world in the right places will try to reassure those investors. But there are still concerns because just in the last hour or so, the Bank of England has had to put out another statement in which it said that it welcomed the Swiss authorities' support and is been engaging closely with its international counterparts, and that the UK banking system is well capitalised and funded and remains safe and sound. That's after we saw the sell-offs of banking shares in London and other European trading hubs this morning. Some of those falls have now been reversed. Share prices still down, but not as much as they were. And we've also had moves to reassure from the Germans as well. The president's spokesperson, the chancellor's spokesperson, saying that we welcome the resolve of the Swiss authorities and that this situation is not comparable to the 2008/9 crisis, because obviously that is the concern, that there will be more widespread problems across the banking system. But in the words of the French central bank head, who said earlier today that these are going to be a volatile few days for stock markets and banks in particular.
Okay, Jonathan Josephs, thank you very much for joining us with that. Let's have a look at some other business news today. And Sri Lanka's foreign minister has told the BBC that he expects the island nation to return to economic growth by next year. In a BBC exclusive, Ali Sabri confirmed that the government will privatise Sri Lanka Airlines. This is part of efforts to raise billions of dollars by selling all or part of 10 state-owned companies. The International Monetary Fund decides today on a $2.9 billion bailout loan for the country. And the embattled Chinese real estate giant Evergrande faces a court hearing in Hong Kong today on a petition to wind up the company. It began one of China's biggest debt restructuring processes early last year, but it's yet to reach agreements with bondholders on the details. There are reports that aims to unveil some debt restructuring terms in order to seek another adjournment of the case. Well, let's have a look at the markets. Before I go, a quick look. We've been talking a lot about the reaction to that Credit Suisse emergency rescue. A bit of a V-shape in the markets today. A big sell-off in the early hours, but here in Europe you can see all the major indices are above the break-even point yet again. So some calm apparently coming back to the markets there, and that's the latest on the price of oil, down by 1.38%. Keep in touch with the @BBC Business team on social media. I'm @Tadhg Enright. Until next time, bye-bye.